Hey guys, welcome back for another video. Thank you for tuning in every weekend for these weekly analysis videos. Last video actually got the most views ever, like just 23 views. So nothing too crazy, but again, really happy to make these and I'm just really happy to give insights on where my whereabouts are on the market and stuff like that. But yeah, like I always say, if you guys really enjoy whatever it is, a simple like or even a comment on how I can improve is always greatly appreciated. But yeah, straight into the video. Last week we had a weekly bullish level around 94. We're watching the 30s, and then we were actually watching the 58s, right? 58, 52. So for starters, if you traded this week and you managed to maintain either a green week or a break even week, props to you because this week was a tough week. And it shows in a way how trading is not about just sticking to one plan and sticking to one strategy, but the adaptability that someone has to have in order to be successful in these markets. Because you could just see that this week has been so volatile, so volatile. And those that haven't blown their accounts, the best way to really manage your portfolio and trades during these volatile sessions is by two reasons. One, widening your stops. So if you unusual have for me, I usually have 2 3 point stop losses, but with these conditions I'm have to run 4 point stop losses because it's just the rotations on this market at the or for this last week or well this week I'm sorry have just been too insane and like the fluctuations are just insane to the point that 2 3 points is nothing, is really nothing, and there's a high chance you get faked out. You could be right, but it's just that you just need to have a wider stop. And two, reducing your risk. The reason why I say this is, for example, me personally, I trade 10 contracts. However, this week I've had to be able to trade 5 just because of how volatile the conditions are. There's a higher chance that, I get stopped out. And if I'm playing wider stop losses, I don't want to, risk more capital, right? And so it's just really important, really important to reduce risk or reduce size and widen those stop losses. And so, for me personally, I didn't walk out green this week. Um, Out of the four, I traded 4 days out of the week. Out of the 4 days, three were red days, one was a green day, and the other day I didn't even take a trade. And so it just goes to show how tough it's been. Really tough. And so yeah, honestly, actually no. Even I would say 2 or 3 days were red. I'll have to double check on that. But anyways, again, really tough week. And if you weren't able to manage to have a green week or even have a break even week, props to you. Really props to you. Because if you go on the Twitter space, on the financial space, wherever you are, you could just see how difficult it was for traders. Alright, straight into the recap. You know, if we were to see, like I always say, every time I always have a pre-market analysis, and so on the fourth was we were looking at the 58 level. We were also looking at the 52 level. That range where we had that weekly bearish below, which is that 5% correction. We're also looking at the 31, which is that spike level below. And so for this day, and let me actually pull it up. And another thing that I want to talk about is the trades that worked for me last week did not the types of trades that worked for me last week did not work for me this week, and that's why it's important to really understand the type of conditions we're in and what type of market we're trading, and that some trades do not, or some entries or some strategies don't work for sometimes these types of conditions. It's really important to adapt to. So again, I was watching the 21.3 on the VIX, and we actually opened around that 58.13 level, and actually that 58.31 was really important for me in the pre-market. In that pre-market, let's just pull it up here. In the pre-market, you could see that that 31 was a level I was really watching, and we actually rejected that really nicely in the pre-market. However, we opened red, and so as long as we maintain below that, I was really monitoring for shorts. Then 5813 came around, which was a level of, I think this is the 2025 low if I'm not wrong, but it was also the weekly low of over here, which is what I was really watching. Um, we opened up, and I took the red on this trade after failing to understand that we were still in a range. So once I took two trades, I took 2 L's here. First trade came from when we sold off, pulled back, and I took an entry here. This trade for me was okay, and me personally, I would take that trade all over again. But where I screwed up again is understanding that. Okay, so we took that trade here. We were entering off that short and that pullback and hoping for another continuation to the downside. However, we then saw, I got stopped out, moved up, right? And then we're kind of in this kind of range, if you can see, right? We're kind of in this little consolidated range right there. And if I were to just, highlight it, you could just see we're kind of in that consolidated range. And so again, you know, you could just see that despite that, we weren't moving. We were not moving at all. And so I took the second trade once we reclaimed, and on the candles you don't see it, but once we got back below and we were holding that level. However, obviously the fluctuations were insane. The volatility was through the roof and everything, so I got stopped out. So on me, this was failing to understand the type of conditions we're in, right? Yeah, we were at that 58.13 level. However, we were chopping around. And one thing I want to talk about is, for me, obviously in hindsight, if you really see this, you can see, yeah, we moved down, right? And right here on this pullback would have been a great. The first trade I'm not upset about. However, we rallied above, and so instead of me personally, and this is what I learned from, instead of just waiting for a pullback like this, I should wait for this move to fully close down and enter on a pullback like that. The reasoning why is because if you really think about it from a buyer and seller perspective, this rally was caused from, strong buyers, right? Buyers were able to erase the move that we had in the initial off the market open. They were able to erase all that downside move, and they were actually able to push. So if you were to see this could have actually been a pullback for a possible move higher, right? And obviously in hindsight it wasn't, but it could have been. So technically I was entering off a possible buyer pullback, entering short, which is again a bad entry on my end. So that's something just to learn from, and that's something that I took a loss from. And so yeah, 58.13 level was pretty important the rest of the day. We reclaimed back above, holding as support, and again, I think it's going to be a pretty vital day, pretty important thing for the rest of the week. All right, Tuesday again, another L. For transparency, another L. And so on that day, and if we were to look at my journal, on that day we were looking for the 58.13, same reason, and then the 57.45. And so as long I am not interested in buyers unless we are able to get below 20 on the VIX and 58 and then 58.13 above on ES, which would then give us that 5. Then I specified as specifically as well, said if that does occur, then I do believe a traversal back to the 5% correction level is possible, which is that weekly level watching. And so here, you can see that 58.13 was just impeccable, really impeccable. And so if we were to go look at the type of trades I took there, again, let's see. Market failed to get above 21.3, which shows signals weakness from sellers for me. Market pulling back, however, we may not. Oh, there was actually news during that time. News. So, again, that's something I was watching. But again, if I was watching the buyer scenario, this is that kind of those things I was watching for. There was actually news, and you could just tell how it's important to really wait for news and stuff like that. So, no trades for me at this end right now. And then another rejection off that 58.13. And so, um, did I even take a trade on this day? I don't know if I took a trade this day, actually, to be honest with you. So, I'm really not sure. Be honest with you. I am really not sure. So, and let me actually double check for you guys right here. Let me actually double check for you guys here. This is on the 5th. I did take a trade. Mm, da, 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 da. So I actually took again two trades, two trades on the fifth, and obviously those two losses. This is where they occurred. Um, like you see, this is why the journaling is really important because to be honest with you, in hindsight, there is no reason to actually even take these trades. So actually, now I see why. Now I see why. The trades came actually once we saw this break above the 58.13 level, and actually got in on this pull deck around 58.13. So I do remember now vividly. Um, we saw this break above on this candle right here. We got above the 58.13 along with all that consolidated in the morning, and then I saw pullbacks in those 58.13s. However, this is where I went wrong, and this is actually now where I see it. Um, and again, you guys truly help with these weekly analysis videos because it gives me more clarity on me analyzing my trades and stuff like that. But you could just see, and I highlighted it, 58.13 and 57.45 was that kind of range we were in. We were kind of opening up within this large distribution of volume. And when we open up within this large distribution of volume, in my opinion, I am going to see a bit of consolidation just because we are unable to get above or below that value or volume. And so for me, for example, the way I see this is if you look at it from this image, right, I have this highlighted range right here. In here we have lots of transactions, right? This is how that volume is built. Tons and tons of transactions, and you could see it here from a candlestick perspective, right? We're just moving up and down, we're just building volume here, whatever it is, right? Lots of transactions. However, if we're back in this range, that same area where we're just having a lot of transaction, people find acceptance and value in whatever this range is. If you want to see one end, like either buyers or sellers, be stronger, we really have to see either above or below that value, in my opinion, obviously. And so that's something to understand. And again, we were in these little choppy conditions. You can see we're in these choppy conditions. And so obviously, what was wrong on this trade is not waiting for a stronger break. And it's actually important because we'll come right back. We'll take a trade eventually this week that I learned from this mistake actually. And so again, instead of waiting for a possible higher move up, like even around here, like a 6 point move up that really shows acceptance, we really only had what, a 3, 4 point move up. And keep in mind, in these volatile conditions, that's nothing. That's nothing. So rather than expecting for this to continue higher, this is a type of entry that only works when there's continuation, when we're actually following a trend, right? When there's a trend to the upside. So again, understanding those types of conditions is going to be very important. And so, like we said, above those 58.13s, we had that traversal to the 5% correction. Next day, we were now looking same thing, 58.13 level and around the 57.58 level. Same thing. We were within that range. I wanted to see if we maintained below that range, and you could even see on the visual of the volume profile. And again, this is just a split up profile, so nothing crazy there. But you could just see that we were still building volume within this range. So same thing I was watching for. And so the levels here were the 13s and the 58s. And the 58s, yep. So you could actually see. Let me see what I had in my analysis. So again, VIX always maintains key for me, and I want to give you actually a visual, and we'll talk about this in the 5% correction level, right? Again, ideally we will see choppy conditions. I am in more favor of shorting breakouts. We are approaching visual 58. So on 58, I wanted to, due to the VIX, I was more comfortable shorting. And so this is actually the only one I took. So I remember this. So I wasn't actually here, but based on this, remember what I was talking about. Within this range, I expected a bit of consolidation. So at the beginning, for me, I wanted to short breakdowns, or I wanted to really, I wanted to prefer shorts and take shorts just because of the VIX structure. And the VIX was at a key pivotal level, which just had more upside. Which when the VIX has upside, there's more downside on ES. And so I was really more comfortable, and due to me understanding that since we are within this kind of range, this value area range, right? I want to be able to take what I find acceptable strategies when it comes to these choppy conditions. And for me, that's taking break and failed breakouts, right? And what I mean by failed breakouts, for me, it to give you a visual, and sorry, I really don't want to make this video as long for you guys if in the case I'm just yapping away. But this is a little consolidation, right? You have that range, you have that resistance level, you have that support level, right? Ideally, for me, when we're in those choppy conditions, I don't want to take a trade here. I don't want to take a trade here. I don't want to take a trade here just because I could get stopped out, right? Ideally, for me, I want to take a trade only if we break above this and fail, right? If we get a sweep of all this and fail. Same way to the downside. If we get a break below and fail, right? And so that's what I want to look for. And that's what I'm talking about when I'm saying ideally I am in favor of shorting breakouts, right? And so one thing I was looking for is, look, if I will be monitoring if we break above the 76 and if fails, I'll be interested in taking a short. And so that actually happened. You can see it. The 76 actually broke about out and failed. However, I was not at my table, my trading desk at that time, so I did not take that. But really unfortunate because for me that would have been a great trade, even in these choppy conditions. So, but my trade came when you could see that we had this rally, and this is what I'm talking about when I said, what I understood from my failures previously, right? I understood that my failures for me, I was taking entries after they really didn't really break out, especially during choppy conditions. You need to see a strong breakout of a consolidation before trying to take a pullback, and that's exactly what you see here. You see this consolidation here. We broke out above, and we had no pullback. However, what was important for me is, again, I was really looking out for a pullback into these 76s to take it long, targeting those 58.13s. But again, did not work, and so we never got that pullback. However, what's important here is we had this little consolidation range, and here we were building volume, and you could see it from the well, obviously you don't see it here, but when it was in the volume profile, you could see that we were just building volume here, building volume here. And so we broke out, and so what I was looking for is a break below that volume, that fails to break down to get it long. And that's exactly what we got here. We broke below, and you could just see, one second. Let me see. Because pullbacks around the 88 targeting 58.13. So you could even see, obviously, around the 88, very close to it, but I was watching a range from the 90s to the 88s. We got that breakdown, right? That little range right there, 90 to 88. We broke down. We failed to continue lower. We reclaimed, and that's when I got in the market long immediately. No drawdown in the trade. It worked perfectly. Targeting those 58.13s, one and done, and that's it. And that's how that trade came, just from understanding, right? Just from understanding those type of conditions, right? So in the morning, I was expecting consolidation, right? And that's exactly what I was looking for. One of those failed 76 trades, right? That failed breakout of the 76. Oh, and you can even see the volume here on the right, right? I was looking for a breakdown below this volume into this low volume node that fails to continue lower, and we move higher. And so that's exactly what I took. And so now after I see that there is a strong breakout and that consolidation analysis now is wrong just because there's a strong breakout, now I'm looking for a pullback to get into the market long. Right. And so that's that type of breakout I'm talking about. Not like the other one that I was talking that, 58.13 barely broke out and I got in on a pullback. So again, and then lastly, don't want to take up, again, want to get straight into analysis. But this one was actually a bit sad because I was actually really liking him. I was actually really liking him for the short. But again, same things. And you can actually see that, it was, despite it being really volatile throughout the week, it's been pretty choppy. But again, this range, you could see that same thing, value and volume being built down here. Within this range, you still just want to play failed breakouts. And that's what I was looking for, right? Same thing I was looking for right here. One scenario to look out for today is the possibility of two-sided activity, as within the pre-market session, we are still within Tuesday range, which shows lack of interest to move outside of either value extreme or the profile. I'll be entering with the mentality of two-sided activity and be more patient on entering pullbacks into volume, unless there's a significant break, is seen. And so, again, same thing, right? we had that consolidation, and despite that, I actually am not sure if I was really interested. I was actually, again, same thing. I give you a visual, and you could even see a visual on the candlestick. Same thing. I talk about how right now the liquidity is really low, so it just gives that opportunity to have those higher fluctuations and more volatile conditions. And so, VIX was also breaking down. So, however, look, I was actually watching same activity. It seemed same activity. Let's see. Below 50, I want to get long unless we tag 76. So I wanted to get in the market long around 50 unless we actually were able to target the high, because again during these conditions I want to short the highs, long the bottoms, right? And so 50 was actually around here, that little like area of strong consolidation that we had. And so we actually never got a pullback until, well, we did get a pullback until those 50s, but I did not want to take it because we already tagged those 76s. However, here at those 76s, one thing I want to talk about, and I want to keep it, is I will not lie though, I'm seeing lots of slowing down of momentum up here. I could be wrong, but tape feels slower, right? I would love to short this. However, I do not want to short this strength from buys, but it aligns with my plan, right? 76 to 23 is a range bound that I expect two-sided activities. And when I talk about that, is again, that 23 and that 76. You could just see right here, it's like you play ping pong around it, right? Bong, 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 right? Just bouncing off those areas. So ideally, I wanted to take the market long unless we tag those 76s, because in my opinion, if we tag those 76s, then I believe we have a move lower. And so that's exactly what happened, right? We tagged those 76s. However, here I was really eyeing for a monitor short, and that's something that, I think I should have actually taken the market short, because in hindsight, it's actually a really good trade, because you can see this consolidation around here. We built a strong amount of volume. What we did is we broke above in this candle above the 76s, and we failed immediately. And it's the same thing I've been talking about, those two-sided activities. For me, my opinion, the bread and butter when it comes to choppy conditions is those failed breakouts. And so we got that failed breakout, we got below, and again, went just shorting the high of the range. And so for me, if I would have taken this, I would have taken targets at the 50 and then the rest at the 23s, right? And so exactly what worked. But again, in hindsight, it was the perfect trade, and I think I should have taken it. Realistically, I should have taken it just because of the consolidation that we had up here. If in the case this moved straight up and moved straight down, then for me that's not it. But since we had that consolidation, we built that amount of volume up here, and we broke above and failed, then to me that is important, right? As long as we have that consolidation, right? We're building that volume, that slash value up here, and we fail. So again, that's just an analysis for the week. It's important to really journal your trades and analyze what went right and wrong. Hello? Okay. Yeah, sorry, my mic went out there for a second. Okay, but straight into the weekly analysis, right? I'm gonna keep this short. Don't want to take much of your guys' time. We are at pivotal levels at ES, right? We are at really pivotal levels. If you really see it on this kind of just little support level, we have a pretty important level to monitor, right? It's a pretty area that we had previous resistance and previous bounces on. So it's gonna be pretty important to see heading into this week where we are, right? We had a strong hammer to the close, but again, the candle structure for me isn't as important, but it's important to see how we continue right throughout the week. So, be on the lookout for that. On the VIX, when it comes to this, again, very key for me to watch, but we keep maintaining holding above this 21.3. As long as we continue to hold above this 21.3, in my opinion, we have more downside move, in my opinion. If we get back below this 21.3, sorry about that, I think a traversal to 20.1, it can be seen. And again, there could be a potential bounce. But I think in my opinion, as long as we hold above this 21.3, I do see continuation to the upside. And that's something to watch too. So tomorrow I'll also be watching this 22.85. Above, there's going to be a lot more selling off. And then below, we should see, again, a bit of two-sided activity, right? Now straight into the weekly analysis videos. For me, based off the profile, the biggest thing is going to be the 55.58. Right? And it's still going to be that 5% correction level, right? It's still going to be that level that for me is really important. And I even gave it a visual, but I'll show you guys here. If you see this 58 level, um, 58 level, this is that correction level I was talking about, and we actually bounced on it last Friday, and people were like, "Oh my gosh, we had a strong bounce." But again, it's important to see if we continue with that strong bounce. But look, one bounce here, two bounces here. Now once below, rejection, rejection. So this 5% correction level is going to be very important, in my opinion. In my opinion. If we are above this, then I do believe this is a possible bounce, and then the market could potentially continue higher. But as long as we do not reclaim above this 58.58, I do see more drawdown in the general consensus of the market. This is all in my personal opinion, right? And that's something to be on the lookout for. So again, it's even possible that within this range right here, from this 58 to this 23 level that we're monitoring a potential bounce point, it could be possible that we're just range bound. Was range bound. And similar to what I'm saying, within this range, just be on the lookout for possible two-sided activities and watch for those failed breakouts. And so, again, this is on a bigger time frame. You can see that 58 is that 5% correction from the all-time highs, and this 23 level is something pretty important because we previously had a resistance there and we had two support bounces there, so it's important to see if we maintain a bounce. But I truly do not believe that this Friday when we had that strong close, right? I do not believe right here in this visual on the Friday candle. I do not believe that as long as we maintain below that 58, I do not believe that we have as long as we maintain below that 5% correction, I do not think that any bounce is a potential rally up to the upside and people are like, "Oh my gosh, this is the dip." Nuh-uh. Unless we get above the 58. And again, this is similar to what I'm talking about. I do not believe in the idea of buying a falling knife, right? Catching a falling knife. If the market is just falling down, it's fine. Let it follow. I want to get in long, whether that's my investments and my long-term investments, my swings, unless I see a rally and then a rally that holds, right? I don't want to just see, okay, buy possible dip because we don't know how much more this is going to continue down, right? The market is down crucial from all-time highs, and you could see it on the visual, right? It is down. It is down insane amount from all-time highs. So I do not want to continue. And look, within the last 3 weeks, we've seen just red, red, red. I do not want to continue. I do not want to predict the bounce. I want to see it bounce and hold. So once I see it bounce, get above the 58 and hold above those 58s, then that's when I'm interested in saying, okay, you know what? This is now the bottom of the market, and I think we can now push higher. So again, that's my general consensus for this. So heading into that weekly level, that's going to be the weekly bearish above and below. Same thing on what I just talked about. Is going to be those 23 levels. It's a pretty pivotal level, and it's even the low of this value area. Right. So again, really want to keep this short just because I know we're getting into a longer portion of the video now. So don't want to ramble away. But again, 58 weekly bearish above. It's going to be that 5% correction level. Bullish above, and you could even see that it's a level that not only has been held, but we even have it's kind of the high of that volume that we have built, and then below the 23s is just going to be the weekly bearish below level, right? And there, I generally do not see any important levels in between that could possibly be on the lookout. So above 58, I do see a traversal back up into possibly 59.30. Be on the lookout for that. And then below 57.23, I do see a possible into a weekly low, and then possible now all the way down to 5600. Right? That's what I see. But yeah, that's it. Thank you guys so much for tuning in. Thank you guys for the support on the views. I'm really happy if you guys enjoy it, and um, be very cautious during these conditions. If it is more volatile this week, be on the lookout. Reduce your risk, reduce your size, and again, you're just gonna thank your portfolio is gonna thank you. So, peace, guys.